If you've been wondering what's actually happening in the Madison, Wisconsin market in 2026, this video is for you. Because depending on who you ask, you'll hear everything from the market is cooling off to it's still impossible to buy to just wait, prices are going to drop. Actually, you don't hear that one. So today I want to break down what's really going on here in Madison, what's changed, what hasn't, and what buyers and sellers should realistically expect this year. No hype, no doom, just context. Let's start with prices. Home prices in Madison have not crashed, and they haven't skyrocketed the way they did a few years ago either. Thank God. What we're seeing instead is a much more normalized pace of price movement. Some neighborhoods are still seeing price growth while others are flattening out. And in a few cases, like this last fall, we're seeing small price adjustments, especially on homes that were overpriced or needed updates. The big shift in 2026 isn't about prices falling across the board, it's about pricing becoming more sensitive to condition, location, and presentation. Well-priced move-in ready homes in good locations are still selling. Homes that are priced based on the 2021 expectations are definitely sitting longer and sometimes needing price reduction. Now let's talk about inventory. Yes, there is more inventory than we saw at the absolutely peak of the market frenzy. Buyers have more options. Homes are staying on the market longer, and in many cases, buyers actually have time to think. But here's the key thing that some people might miss. Madison is still a supply-constrained market long term. We simply just have less homes than the growth of what's happening here in our city. And I can give you an example of that. Buyers that I'm working with right now, we put an offer in on a home in Cross Plains, which is right outside of Middleton on the west side of Madison. And there was only like one house for sale in that market in the beginning of January. And there were 6 offers on that house. So while inventory feels better compared to the chaos of a few years ago, it's not suddenly abundant. It's just a little more balanced. Now let's talk about buyer behavior, because this is where the real shift is happening. Buyers in 2026 are more informed, they're more cautious, and they're less willing to overpay just to win. They're not the 3% interest rate buyers anymore. We are done with that phase. We're seeing fewer emotional bidding wars and more intentional offers. Inspections matter again, and they're a given. Financing terms matter again, and buyers are paying closer attention to monthly payments with the economy and the interest rates, and not just the purchase price. That doesn't mean buyers have all the power, but it does mean that it is a much healthier environment for more thoughtful decision making. For sellers, this is an adjustment. The days of putting a sign in your yard and getting 10 offers in a weekend are usually behind us. In 2026, selling successfully means pricing correctly from the start so we can get people in the door, presenting the home well, possibly staging it, cleaning it, all those things, and understanding your competition. And I would also argue understanding the time of the year that we are in when you're selling. Homes that are prepared and priced realistically are still selling fantastically. Homes that aren't, just aren't. Let's talk about interest rates, because I know that's what you buyers really care about. Right now, mortgage rates have eased to their lowest levels in over 3 years, dropping to roughly around 6.06%, which is the lowest since 2022. That's a notable shift from when buyers were buying at the 7% range in around 2023, which just totally reduced purchasing power for my buyers. So here's the thing, when rates fall, buyer activity tends to rise, and more buyers find themselves able to afford a home, which increases the competition, especially in markets like Madison, where supply remains historically tight. That competition, combined with relatively low inventory, means that we are seeing more buyers entering the market and more multiple offer situations. So for those of you out there thinking you're gonna wait for the spring market to start buying, reach out to me now. I cannot tell you how important that is. We're in the beginning of January, and I am actually really surprised at the multiple offer situations that my buyers are in. Again, it depends on what budget you're in. It depends on the location you're looking at. So I'm not trying to scare you, but we also need to be prepared and realistic. The perfect rate isn't the only thing that affects what you pay. Market dynamics really affect it, right? So for many buyers waiting for a slightly lower rate, it can really backfire on you. If demand spikes and inventory stays low, prices can rise so much that you end up actually paying more than if you would have bought in 2023 with the 7% interest rate and had just waited for the refinance, right? So rates are still above the historic lows that we saw earlier in this decade, but I feel like buyers are finally adapting. The people sitting at those low interest rates are just simply growing out of their home if they have big families now, and they're like, okay, I guess it's time to move. So instead of waiting forever for perfection, we are seeing strategic planning, including rate buy downs with their lenders, targeted financing decisions, and plans to refinance, like I said, if rates drop in the future. And you guys, the reality is, timing the market is just nearly impossible. And waiting for marginal rate improvements can cost you more in the long run if competition drives up and if you're continuing to pay rent in a very competitive rental market. So what does this all mean for you in 2026? It means Madison is in a transitional market, not crashing, also not exploding, but shifting into something that I feel is more balanced and more sustainable for both sides. For buyers, this can be a really good time to enter the market, especially if you want choices, being able to check inspection, and the ability to move at a reasonable pace. For sellers, it's still a very solid market to sell, but strategy and preparing your home for your listing actually matters, and that's where I come in. I can help you with that. And for anyone relocating to Madison, this is a moment where understanding neighborhoods, timing, and long-term value really pays off. So what's next, you ask? I expect Madison to continue growing steadily. Everybody wants to live here, just saying. Demand isn't going away. People still want to live here, and over time, that keeps pressure on prices. Our Madison homes have been appreciating way higher than the national 6% average. So the biggest mistake I think you can make in 2026 is trying to time out the market perfectly instead of focusing on what actually fits with your current life, your current budget, and then we'll make that long-term plan for you. If you're buying, selling, or relocating to Madison and want help making sense of how this market affects you specifically, I'd love to help you. You can find all my info in the description below to reach out so we can have our first chat. And if you found this helpful, let me know in the comments. Are you watching this as a buyer or a seller or just someone trying to understand what's happening? And please give this video a like and subscribe so we can share with more people who are looking into Madison, Wisconsin. All right, guys, I'll see you on the next one and have a wonderful, beautiful 2026.